Hi everybody, Mindy here. I'm going to do something a little different in this video. As a lot of you know, I do a program every Sunday afternoon called PowerTrader FX, where I go in and I tell you exactly what to look for in the market moves for the week in the USD pairs. And so people tell me all the time, they go, "Oh my gosh, how do you know where the price is going to go every week?" Well, I don't know every week, but more often than not, my analysis of the market is spot on the money. And, there's no guarantee that it's going to be spot on the money every week, but more often than not it is. And so what I'm going to do today is I'm going to go ahead and give you guys essentially the audio of my PowerTrader for this week. So what you'll be seeing, you will not be seeing the charts that I actually used in my PowerTrader workshop this afternoon. You're just going to be seeing blank charts. But go ahead and listen to the information I provide, and if you think that you would like to sign up for PowerTrader Forex, go to my website and there is a sign up there where you can be part of our program every Sunday. We do it every afternoon on Sunday at 5 p.m. The program usually lasts right at an hour and a half. And if you think you'd be interested, go ahead, sign up, join us. I think you'd really like it. So anyway, here's the program for tonight. Well, good afternoon, everybody, and welcome to PowerTrader Forex for February 10th, 2019. I'm going to start this afternoon with something else, okay? I just want you to know, if you have demo accounts with CoinEx, you're not able to get into them at the moment. Don't worry about that. I've already been in contact with them, and they said that they are working, doing some maintenance on their demo server, and they will be up as soon as possible. They said that it could take somewhere between 7 and 8 hours, or it could take 10 minutes. So anyway, they'll be back up at some point sooner or later, and when they do come back up, everything in your account should be correct. And I'm hoping that they're right, because I have a lot of research data in these demo accounts, and I don't really want to lose that data and have to start over. But anyway, that's the story from CoinEx, so I thought I'd let you guys know so that you would not be having panic attacks if you have demo accounts and can't get into them. So anyway, there's no reason for everybody to contact them, because they're going to get the same story that I got. The live accounts are working fine. So no problem with the live accounts, it's just the demo servers. So anyway, the information provided in this weekly outlook is for educational purposes only and should not be considered as specific financial advice. Nor should the trade ideas presented be considered specific trade recommendations. Forex trading carries a high degree of risk and is not appropriate for all investors. The leverage involved can work for you as well as against you, and you are advised to never trade in the Forex market with funds that you cannot afford to lose. And it is up to you to consider all relevant risk factors associated with Forex trading, as well as your own personal financial situation before getting involved. If you have questions about the risks involved in Forex, please contact me directly via email, and I will do whatever it takes to help you understand what's really happening in the Forex markets, okay? You might want to take this time to go ahead and download the handout for today. Raymond has posted it in the chat box for the Zoom meeting, but if you ever need my email address, it's right here front and center on the handout. Okay, so don't ever hesitate to contact me. If you have questions with a broker or with something regarding Forex, okay, or especially something that has been in the handout, or maybe you do not understand what all of the risks involved in Forex are. And maybe next week we'll go through and we'll do a risk session and talk about all of the risks involved in Forex. That might not be a bad thing to do. We haven't done that for over a year, and so maybe we'll plan that for next week. Before we get started, let's look at the calendar of events for the coming week. And what we see is that this evening there really isn't anything in the way of red events for tonight or this evening. So at 3:30 a.m. though, the GBP, the Great British Pound, has 3 different things coming up. They have their GDP, they have manufacturing production, and preliminary GDP quarter over quarter. So these are all 3 red events, right? If they all come in significantly better or significantly worse than what is projected, we could see a move in the GBP pairs of over 100 pips. It doesn't mean it will happen, it means it could. Okay, so we will want to probably stop trading GBP pairs about 3:15 a.m. if you trade the night shift, and don't resume trading them until about 20 minutes or so after the news event happens. And that way you won't get caught up in some big fake out spiky move. Okay, also GBP pairs, I'm suggesting that you shouldn't really be trading those at all right now if you don't have to, because the Brexit thing is still very much in play, and who knows what's going to happen from one day to the next. Most of the biggest moves that we see in Forex don't come off of facts anyway, they come off of rumors, right? So right now it's just not a good idea to be trading GBP pairs. Okay, on Tuesday at 7 a.m., again with the British Pound pairs, their equivalent of our Fed chair is going to be making a speech. And at 11:45 a.m. Kansas City time, these are all in Kansas City time, our Fed chairman, Mr. Powell, is going to make a speech. I hope he doesn't quit. He seems to be not getting along very well with the White House, which is a real crying shame. I think he's probably the best Fed chair we've had in 30 years. I really like him. So anyway, at 7 p.m. on Tuesday, the New Zealand dollar has their official cash rate. This is a huge deal. These cash rates, interest rate announcements, literally move the market more than anything else. They're not expected to change their interest rate, but you never know what they're going to say in the policy statements that go with it. And if they start talking about raising or lowering their interest rates, we could see a huge move in NZD pairs. And then at 8 p.m. they have their inflation expectation report and a press conference. So Tuesday evening it could get very volatile for NZD pairs. On Wednesday at 3:30 a.m. again with the British Pound with their CPI report, and at 7:30 a.m. we have our CPI report and our core CPI numbers month over month. And then at 1:10 in the afternoon, the NZD, their Fed guy, is going to be yapping, so who knows what he'll say. And then on Thursday, 7:30 a.m., the U.S. dollar has core retail sales, PPI, and retail sales. And so this could be a big day for the USD. And then on Friday, again at the 3:30 a.m., British Pound has retail sales numbers. Okay, so it's there's enough on the agenda this week to have some moves in the market, and that's what I like to see. We do like volatility because volatility is what allows us to make trades. We just don't like crazy volatility, which is what we could get out of the Brexit, right? So let's put that calendar away and go on into our pairs. So let me move some things around on my other computer and we'll get started. Okay, the first one that we'd like to look at is the Euro USD. Now last week what I had said is that the sells would be the preferred trades to hold on to, and I said to be very careful with short-term buys. Well, I think we were spot on our analysis of last week, because as you can see, there here's the five daily bars for daily charts, right? There wasn't an entry signal to be had anywhere off of the daily chart last week. But if you had been eagle-eyed enough to get into one of these sell continuation signals early in the week last week, you would have been in it for the entire run down. Now, when I want to make it clear that when I say that the preferred trade to hold are sells, what that means is that if you can get into a sell, what you would want to do is put a very small profit stop on that trade and then hang on to it. Whoops, I didn't mean to do that. Because by doing that, 1, 2, 3, 4, I messed this up a little bit. That's going to give you the best opportunity for being in a swing trade, right? But what we see along the way this past week is there were quite a few little opportunities where you might have wanted to do buys, right? I mean, this would have been a justifiable buy. But I had told you on Sunday to be very careful with short-term buys, because they would be short-term, right? And they were, like this one right here. Had you got in at the very best pip, which is unusual, and you probably wouldn't, you would have gone in at 114.01. The best that trade ever got was 15 pips, right? And that's the best it got. So if you hadn't had a small stop on that, you could have very well gotten stopped out and then been in ugly the whole rest of the week, and maybe next week too, right? So anyway, just because you're holding a sell trade does not mean that you can't take short-term buys along the way if you feel like it. You just want to, if we know that we're looking for a big down move, you do not want to be going into a buy and say, oh, look how smart I am, I got into a buy here, so I'm going to just not bother putting a profit stop on that because I'm expecting a reversal in the price. Well, if you do stuff like that and you don't put your profit stops on, it's gonna bite you in the butt, and it's gonna hurt, right? So there's never an excuse on any trade not to have a small profit stop. Always, right? Because we never know for sure what the next price bar is going to do, right? But anyway, we kind of expected this last week because from where we started out last week, it just felt right that the price would go dollar positive. Now, why? Why did that feel right when we had, here's our 5 bars, we started the week right here? Why did it feel right that we would be looking for sells? Well, one of the reasons is because we are incorporating fundamental data into our analysis on Sunday, right? And what did I talk about last week regarding the euro? I talked about how those yellow vest protests are getting more and more extreme, and they continue to do so. The other day, some guy had his hand blown off because he picked up a canister that the police had thrown at them, a tear gas canister, so he picked it up to throw it back. It exploded and blew his hand off. But things are getting much more violent every week over there. It's not going to end well. And when the world wakes up and starts paying attention to what's actually happening, if they don't get this thing under control, which means the government is going to have to start making some concessions, because these people are tired of being put upon, and they're kind of at the point where they're yelling out the windows. What was the movie about 30, 40 years ago? I can't take it anymore. Can't remember what movie that was, but great line though. But anyway, that's kind of where people are at. They're just at the point where, they're just screaming, we're not going to take it anymore. And so, things in Euroland are going to have to start changing, right? So people are getting sick of being bossed around by Brussels when they have no control over voting in or out those people or policies. So anyway, it's just not pretty. And it could, I'm not saying that it will, but it could create a situation where you could see the Euro USD pair literally drop down back below 105. You know, theoretically, we could go back down to equilibrium at 1.0, maybe lower than that. It's been there 2 or 3 times since I've been trading, right? And in the big picture of our Fibonacci sequence that we've been in for 6 months or longer, a long time, we are in fact looking for a price to come at least down here between these 3 red lines, which would be from 111.50 essentially down to about 109.50. So, you know, in the big picture, if we're going to trust Mr. Fibonacci, we're looking for lower lows down into this area anyway, right? So knowing that the chaos that is going on in France and Hungary and several of the other countries in the Euro monetary zone, you know, it just adds more fuel to the fire that we will see this, and it could go much further down than just these 3 red lines. But to complete the promise of the Fibonacci for our current Fibonacci structure, we have to get down here, somewhere between these 3 red lines. After that, you know, as far as Mr. Fibonacci is concerned, it doesn't have to go lower, but it could, or we wouldn't have this black line down here, right? So anyway, and it could go sailing lower than that too, but it would have to be something pretty spectacular to make it drop below there. So anyway, for this week though, what we expect to have happen when we look at where the price ended the week, we ended the week literally at the low for the week, right? Now, what have I told you about situations where you end the week at the low or at the high? Typically, now that typically doesn't mean always, but typically what happens when you end the week at a low, the price will continue to come lower through the first day to day and a half of the new trading week before it has a rebound. Okay? Now, if that happens today or tomorrow, right, if we get a new low, and we would be looking for a low somewhere between the pivot point for today and a pop out of the daily chart. That's a wide range, but anything in here is possible. But if we could get a good solid low somewhere in this range between 112.94 and 112.50, that would be an excellent opportunity for a buy trade that you might want to hold for a swing back to wherever the moving averages are on the daily chart at that time. Now, the lower the price goes, if it goes lower, the lower the EMAs will be, right? Because they move with the price. But let's just say that tonight we had a good solid dip down in here somewhere, maybe somewhere around 112.80, something like that. If you can find a reasonable entry signal from your short-term charts, you'd want to take that trade. That trade you would put a small profit stop on, and the goal for that trade would be to come back up to somewhere between the 2 moving averages on the daily chart, even though they would probably be down here at that time. They'd probably be lower than where they are now. But that would be a good swing trade back to the moving averages, because we've been away from home for 3 days, right? The price bar doesn't like to stay away from home for too long. I've seen it stay away for 20 or more Ds occasionally, but that does not happen very often. But you know, the phenomenon that you see on one time frame, you'll see on the others. And here we had a situation on the 4-hour chart where the price stayed away from home for 1, 2, 3, 4, 5, 6, 7, 8, 9 price bars. So see, it can happen. I've seen it literally be 20 or more bars on daily charts before. Not very often, but a few times. But anyway, the longer it's been away from home, the more likely it is to have a rebound back to the moving averages. Okay? Now, thing is, if we could get that, right, and we had the bounce back to the moving averages, in this area of the moving averages, you're going to be wanting to try to find a sell trade, right? Because what we really want is to ride the price down to here, if we can, right? So we could, this week, if we got a solid move back to the moving averages on the daily chart, you'd want to be looking for a sell trade. And again, you get a small profit stop on it and try to hope that the price took the next leg down, next leg lower in the bigger picture, and you know, we'd be trying to hang on to that chart, that trade down to here. Okay? So what I'm saying for this week, I'm saying because the price should continue down to start the week, look for short-term buy signals to start the week. Below 112.50, start looking for swings back up to the daily EMAs. And then if we get back above 113.80, start looking for sells again. Okay, so is everybody clear on what we're looking for? Now, does that mean that if the market doesn't move the way I think that it will, that you should just not make trades? No, that's not what it means at all. What it means is that that's what I expect to see in the price move this week. But let's say that, you know, the price turns around right now and goes up, right? Well, if it goes up from here, since we don't have that clear area where we know we want to enter, if the price goes up straight up from here, you might still look for sells here, but you're going to be more tentative about it. They better be really good sell signals off of the mid-range charts, because maybe I'm wrong and maybe the price is going to go up all week, right? So if it does, you guys know what to look for. You always are going to be looking for buys if you're low on the charts, especially if you are past the pivot point for whatever day it is, right? So, and you're going to be looking for sells if the price is high on the charts, right? Now, it might be high on the 4-hour chart, not high on the daily, right? That can happen. If it is, it just means that it's still a signal for a sell. It's just not, you know, it's a sell that you'd want to be more careful with to make sure that you're getting a good entry and can get a profit stop on it. Once you have a profit stop on something, it's like you don't have to worry about it, right? Your worst case scenario is you're making money. Maybe it's just a little bit, but you know, it's better than not making money, right? So, you know, when you trade that way, and always put your small profit stops on your trades, you'll never be disappointed, because you literally will close every single trade for a profit. And some trades don't get stopped out, and then you make a lot of money on a trade, right? So anyway, you guys kind of know what to look for here. And the lower the price goes this week, the more likely we'll be wanting swing trades, especially if it can go lower before it goes and touches the moving averages, okay? And then on a big dump, if it would take a big dump in through here, we'd get more serious about looking for swing trades to possibly go back to the moving average of the 15-minute charts, okay? So now let's go take a look at the dollar index. And I've stopped doing write-ups on the dollar index usually because I just don't have time. So we'll just talk about them instead. Now, we had a very strong week for the dollar index last week, right? And that helped pull that Euro USD pair down, right? Now, last week, I was kind of worried that here was the bar for last week, that we might even dip lower on the dollar index. But if we had, we could have literally come back down to here without disrupting this Fibonacci structure that we've been in for months, right? But in the big picture, just like on the euro, we're looking for that lower low to finish the Fibonacci structure. In the dollar index, we're looking for a much higher high to finish our dollar index Fibonacci structure, right? So on this dollar index, we had a beautiful week last week. Here's the 5 bars for last week. And, you know, the price did pretty good every single day. Friday, it had kind of a restful day, but I think that there's every likelihood that it was just taking a breather, kind of running up the hill, and it had to sit down for a while. And I think what we might be in store for this week is another very strong week in the dollar. Now, if we get a really strong week in the dollar, realistically, we're not going to get up here this week. That'd be kind of ridiculous when we can see that, you know, these weekly bars just are never, you know, this big, right, from here to here. We don't have a bar yet for this week, but it would not be unusual to have a high that would come in. Let's try to put this where it would be, somewhere between the parabolic SAR and this trend line. Okay, that somewhere in this range right in here is absolutely doable. Now, we will probably see some resistance if the price goes up and gets up here to this parabolic SAR area, right? So that could happen maybe midweek. Maybe we'd go up for a couple of days, bump into these parabolic SARs, get knocked back down to the moving averages, and then maybe late in the week we'd start the trek up again. So that would be a very reasonable expectation for a price move this week, right? As the dollar index goes up, most of the USD pairs should go positive for the USD, right? They don't all move in complete coordination, as you know, but they should, you know, if the dollar index is going up, what it is, it's a basket of currencies against the dollar. So most of the USD pairs should go USD positive, right? So anyway, that's kind of what I would expect for this pair for this week. Now, see how also on the daily cloud, what's happening is we are kind of crossing through that little ribbon of cloud, right? And so if the price does cross through here and has a close above here, then theoretically we should start trading above the cloud. But here's what happens in the weeks to come. You know, in a few weeks, we could be trading above the cloud and still be trading lower than we are right now. So, you know, if we come up here and get up somewhere in this area, like I said, the price still could come back down again before we get up to here, right? So anyway, just kind of know that, you know, even if we start trading above the cloud here in a few weeks, we could still be trading lower than where we're trading right now. Okay, so anyway, that's kind of what's going on with the cloud on the daily chart. Now, the cloud on the weekly chart, if we go ahead and extend it over, it's saying, baby, we're going up, right? That's what it's saying. So at least for now. And this is projecting 28 weeks into the future. And you can see that this dotted trend line kind of follows that scenario too. If we extended this out, we should know that if the price were to drop back down to this trend line at any point in the future, that would probably be of pretty solid support, right? And we can see that going out here to at least 20 weeks from now, we should be staying above this trend line, right? Don't know that that will happen, but if we wanted to look at it just on a technical basis and take nothing else into consideration, that's what we would be looking at. Okay, so does anybody have any questions about the dollar index or the euro before we move on forward? Okay, I'll take that as a no. Okay, let's move over to the AUD USD. Okay, now last week what I said that sells were the preferred trades to hold, and I said be careful with buys unless the price falls below the daily cloud, then look for short-term buys, right? Well, we did fall below the daily cloud, and once we fell below the daily cloud, we were looking for short-term buys. Okay, so we fell below the daily cloud at 71.30-ish, right? So from 71.30-ish, we would have started looking for our short-term buys in the 4-hour chart right in through here. Okay, so was this a buy signal? Nope. Was this? Nope, 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 nope. Oh, here's one. So we were looking for a short-term buy somewhere below the daily cloud. The first one that we had that showed up was 70.60. Right? And it was a short-term buy. If you didn't get out of that when it hit these moving averages, you would have started dissipating your trade, right? So you should have actually closed that trade when the price crossed above these moving averages. You should have moved your stop up to right below them, and you should have gotten stopped out right there, which means you wouldn't have made a ton of money. But as short-term buy, we're not looking to make a ton of money. Right? We're looking to get in and get out. Can this price go on up higher? Sure, right? Because why? Why would we expect that maybe this price would go up higher? Because we've been away from home for 3 days, right? The longer it's away from home, the more it's going to want to revert back up to the moving averages, right? So, yeah, for right now, if you didn't get out of that trade and you were still looking for a target area, your target area would be somewhere between the pivot point and the red moving average, and that'd be your target to exit the trade if you're still in it. But honestly, you shouldn't still be in it. You should have gotten stopped out. You should have just been happy to take the $20 or whatever it is from here to here, right? Now, when we look at our weekly chart, though, here's what we're looking at. Last week I told you that we would stay in this right-hand quadrant of our X because duh, I mean it was a huge range, right? Well, this week it's still a huge range, and theoretically we should stay in this quadrant again this week, even if the price drops down to here, right? It could go as low as 69.72. It could go as high as wherever this line would be. Let's try to carry this forward without distorting it too badly. There, something like that. So we could literally go as high this week as, oh, look at that, right up here where we would meet back up with the cloud and the 200 moving average. See how things went? When things make sense, when you're looking at several different things that have nothing to do with each other and they're all saying the same thing, then you have to pay attention. So this would be a number where we should really pay attention if the price starts going way up. Now, on the downside, why would we want to pay attention down here? Because we'd be in our array area and we'd be on this moving average. Now, if the price was really going to go dollar positive all week, we could break below this area. Then what would we be looking for? We'd be looking at our bubble butt, which would still be kind of right a qualifier for this trend line. But if this trend line breaks, we're looking at this trend line. If that breaks, we're looking at this trend line, right? So you've got obvious places here. If the price really starts gaining momentum for a move down or a move up, you know kind of where to look, right? So now obviously this is a huge area on the weekly chart, but when we take it on the daily chart, it's not that crazy, right? Because we know that we might find some resistance here. We know that we might find some resistance here. We know that we might find some resistance here in the zone and on this bubble butt, right? And if it broke above all of that, then yeah, we'd be right up here, headed back up to right there. Okay? Does everybody get how these charts all work together? And they'll tell you exactly where to look. Now, in the big picture of the Fibonacci weekly structure, we are still looking for lower lows, right? So could this break? Obviously it could. And are these two trend lines where we would expect to find the next low? They sure are, right? So anyway, that's kind of what you're going to look for this week. So this week, what I'm telling you for this week is that there could be both good and bad, good buy and good sell trades all week long. Because look where we're starting the week, right here. We could have good buys here, we could have good sells here, we could have the price go down all week and give us good buys all week long, or we could have the price go up and give us good sells all week long. This is a week where you can have buys or sells, right? And, if the week starts out with a continuation of the down move, then we'll have better trade opportunities, because if we could have a couple of days of down move, then we will be in position for a relatively nice swing back to the moving average, right? And then by midweek, who knows, we could be looking for sells or whatever. Now, this pair though, it ended the week low, but it did not end the week at the low. Right? So even though it was only about a 10 pip difference here between the low and where we ended the week, this does not qualify under that assumption that I make when I say when a pair ends the week at the low, you can usually expect the price movement to continue for another day or two. This didn't. 10 pips does not count. So this pair is not, we are not under the assumption that we will start the week with a day or day and a half of primarily downward price action, right? There's a huge difference between closing at the low and closing 10 pips above the low. It's just not the same thing, right? So anyway, this pair, you can look for buys or sells from today forward, and you might get sells first, you might get buys first, but it could be a week that there could be a lot of good trades, buys and sells all week long. Just be careful with all of them and make sure that you get profit stops on any trade you take, right? But what would we prefer to see? We'd prefer to see this price come down for a couple of days and then go up and then come back down. That's what we'd like. We'd like to come down and then up and then down and then up. We always want that. But you know, you never know what you're going to get. You always have to be prepared for whatever the market decides to do, right? So always know, where would I look for buys? And what obvious places would I look for buys? What obvious places would I look for sells? Right? And when you know what you're looking for, it makes it a lot easier to take trades when you see what you're looking for, because you already have your mental plan of attack for that price point or that price area, right? But people who just see prices moving up or moving down and then try to make a plan, oh, the price is moving up, I better be doing a buy, or, you know, oh, the price is moving down, I want to hop on the seller, I want to do a reversal trade. You know, those people don't do well in their trading because they're, you know, trading out of panic. But, you know, if the price is moving down and you go, oh yeah, I know that I'm looking for a buy potentially at this 7,000 area, and now the price is down there, and you go to the charts and you don't have to think about it. You just look at it and you say, yeah, I know I want something in this area. Does what it's doing at this moment in time make sense to fit into that plan? And then you say, yeah, baby. And, you know, you take that buy or whatever, right? You always want to have your plan built in your head before you go willy-nilly hopping in and out of trades, because that's just not going to do you any good in the big picture, right? Okay, so that's what we're looking for there. Does anybody have any questions about the AUD-USD? Any specific questions? Okay, I'll take that as a no. And let's move on over to the USD CAD. Okay, last week I said that buys were the preferred trades to hold, or short-term sells from the 4-hour chart. And what did we get? Well, we got a whole bunch of short-term sell opportunities from the 4-hour chart, none of which would have been worth much. Short-term sells from the 4-hour chart is exactly what we were looking for. Now, right? And I also said that buys were the trades to hold. Now, there very well could have been a situation where you might have still been in a buy from this previous week. And maybe it was even a buy that you were in that was currently ugly on Monday of last week, right? But knowing that buys were what you wanted to hold, look what you could have had. You know, you could have literally been in it all the way to the top of the week, right? So, but anyway, so again, we had that one pretty darn good, right? We had our analysis pretty good on this pair last week. And this week, what would I expect? I would expect that we'll probably have a little bit of choppy action in here, but I think overall this pair is going to make higher highs this week, because I think it's going to go dollar positive. Look at the tiny week that we had last week. You know, I mean, it was just, there just really wasn't much there. We didn't cover hardly any new ground, right, from the week prior, right? But we did have a higher low than the week prior and a higher high. So on this pair, I really think that, you know, we're gonna start moving back up. And where could we go this week? We could go right back up here into this range of the parabolic SAR, the zone of the weekly chart, and this old trend line that we have here. So if we had a good week, a good solid week for dollar this week, we could literally be right back up here by Friday, right? Now, we've got some major resistance areas on the daily chart to fight through to get there. The first one that we're going to have to fight through is the zone and the pivot point and the bottom of the cloud, right? And then the top of the cloud, right? So there's a lot of areas where we could have short-term sells going on, even if the price does want to go up all week long. Now, if the price goes down, where's it going to go? It's going to go first to here. We might see some support here, then here, then here, then here, then here, right? So there's plenty of places for buy trades that are very possible this week. There's plenty of places for sell trades that are very possible this week. But in the big picture, I have a sneaking suspicion that we're going to go up. Now, remember last Sunday, we were looking at this price bar, and I said it troubles me that this price bar came lower than this red line, right? And I said last Sunday, I remember telling you, if the price continues to come lower and it comes down to this blue line, then we might have to rethink the Fibonacci structure that we believe is in play, right? That's what I told you last Sunday. I remember saying it. But fact of the matter is, we did not come down last week to this blue line, but that still, what that means is that as far as we know, this Fibonacci structure is still in play. The only difference is, because it came down past this red line, it changes where our ultimate D is that we'll be looking for. So if the price continues to go up to fulfill this Fibonacci structure, instead of looking for a D that will come in somewhere between these three red lines, we now will be looking for a D that will be coming in somewhere around this blue line. Okay, so it hasn't negated our Fibonacci structure, but it has changed the ultimate outcome that we would be satisfied with to declare the Fibonacci finished. Okay, does that make sense to you guys? What I did when I developed my Fibonacci is I color coded them to make it easy to tell what goes with what, right? So anyway, because of the fact that we dropped below this red line last week, now as the price goes up to finish this Fibonacci, we'd be looking for this blue line instead of the red lines. Okay? And if the price would have gone below this blue line, we would have to completely rethink the entire Fibonacci, because maybe it's not the Fibonacci we're looking for, right? So, and the thing is, with Fibonacci, they can do that to you sometimes, because you never know for sure if a Fibonacci is true or not until after the fact, which is kind of sad, right? but sometimes you can think that you have a Fibonacci structure, and then you can sit there and base your trading thoughts on that Fibonacci structure for weeks or months, and then find out another month later that nope, that wasn't the Fibonacci that we were looking for, right? Doesn't happen often, but it can happen, and sometimes it does. but most of the time, when you can find a Fibonacci structure in something, more often than not, it's going to ring true. But the other thing about Fibonacci structure is that sometimes a Fibonacci structure might take a year to play out. And that's not uncommon, especially when we're talking about a Fibonacci structure off of a weekly chart, right? So just because we want it to go from point A to B to C and then to D, we would like to have it in that order and that quickly. A, B, C, D. No, life isn't like that. It might take months for you to find B, and then it might take months and months and months to find C, and then more months and months and months to actually get to D without negating the Fibonacci in any way during that time. Okay, so Fibonacci's are kind of flaky like that. But if we can break above this cloud, see, on the daily chart, then, and start trading above this cloud, we could be trading higher. Even, you know, even 28 days from now, we'd still be trading higher than where we're trading now, right? And then we don't know what, you know, we don't know if this cloud's gonna move down or up. Right here, all we know is that it's getting thicker. So that's not much help once you get out that far. But anyway, we could definitely see we are coming up onto one of these thin little ribbons of cloud. Of course, this won't be this week. This ribbon right here would be probably sometime next week, middle of next week, right? But anyway, for this week, we could definitely come up here and get, you know, start working our way into and through this cloud this week. Okay, so for this week, what we want to do is we want to start the week looking for either buys or sells, short-term trades. If we can get below 132, then we definitely will be looking for buy positions to hold. And even though we're holding buys, if the price drops down here and gives us buys to hold, as the price moves up and starts having, you know, pop outs or zone trades on the daily chart, we're still holding the buy, but we'd be doing short-term sells also, right? Because there's no reason not to have a long-term strategy and short-term strategies going on at the same time. Now, if you're trading in the United States, you can't do that, right? Because in the United States, the regulators seem to believe that you should be all in on the direction that you think a market's going. You know, they say, well, if you have a buy trade, you can't go doing a sell trade. Oh, duh. Why? You know, it makes no sense. Their thinking makes no sense. That's why I don't trade with U.S. brokers, because that's just crazy talk, right? So anyway, if you guys ever want to have a discussion about why I trade with foreign brokers, maybe we could take a Sunday and talk about that in detail. But that's one of the reasons why I refuse to trade under U.S. trading rules, because they don't seem to understand that people can have multiple strategies going on at one time. And there's very legitimate reasons to have buy trades and sell trades in the same pair in your account all at the same time. Okay, so anyway, that's just my rant about that. I apologize. I get a little worked up when I think about what they do to people. So anyway, let's go take just a quick peek at GBP USD. Here again, for another week, I'm telling you to stay out of these pairs, all of these GBP pairs. But right now, we're starting the week literally smack dab in the middle of the weekly array. Couldn't be starting it any closer to the middle, right? So for this week, the GBP pair has an equal opportunity of going up or down, right? It's like a 50-50 opportunity. So that means that until this pair would get down here doing some pop outs or something on this daily chart, you probably aren't going to want to do anything with this pair at all for the first couple of days this week, unless it has some, you know, some kind of a gigantic bar. But even if it has some kind of a gigantic bar, that might be just the first volley of some big move one way or the other. So anyway, GBP pairs are just plain dangerous right now, so we're not even going to worry about trying to build a trading plan for them, because it wouldn't matter what kind of trading plan we built. It's not going to mean beans, because they can do anything at any moment. Okay, so let's move over to the NZD USD pair. Last week I said a retest of the 6,800 would be a great place to look for. No, that's what I'm saying this week. Last week I said sells are the preferred trades, at the higher the better, and then start looking for short-term buys at or below 6,800. Okay, so anyway, we had that pegged pretty good last week. But okay, we were saying look for buys, short-term buys below 6,800. Well, here was 6,800. So where did we get some short-term buys? We had one right here. That would have been worth a little bit of something. And then after that, the next opportunity that you had for another buy might have been this bar right here, because remember what I've said, when you have your 3-bar move, after you have been the 3 bars, you're just looking for lower lows. Okay, so that would have been bar 1, bar 2, bar 3. So you might have considered doing a buy here, you might have considered doing a buy here, and then you might have considered doing a buy right in that zone bar right there. But so anyway, what we had were some short-term buys below 6,800. But the trades that you would have wanted to stay in would have been sells. As you can see, here's the 1, 2, 3, 4, 5. There weren't any sell signals here on the daily chart, and there really weren't any sell signals here on the 4-hour either. But you might have still been in a sell from the week prior. And if you had been, you would have had a wonderful, wonderful move last week in this pair going down, right? But there really wasn't any place to get into it except right there. There was a 4-hour sell continuation trade situation, but I'm not so sure that I would have taken that trade myself after this sideways move that we'd had. And so, you know, if you weren't in it from the week prior, you probably wouldn't have found a place to get into it at all, right? Which is just tough luck, right? Tough luck. That happens, because the thing is, if we might have the market pegged perfectly on how it's going to move, right? And we kind of did last week. But if there's not an entry signal to go in, how are you going to get in? You're going to guess? Are you going to guess that you're right? You better not, because that's just not smart, right? So when the market doesn't give you entry signals and you miss out on a big move, you just say, geez, that's too bad. That's too bad that we didn't have an entry signal, because we thought that this is what was going to happen, and sure enough, we were right. But if there's not an entry signal, there's not an entry signal. You just have to let it go. Let it go. You know, the thing is, Forex is always going to give you entry signals somewhere, right? And so you're not going to be in every move the market makes. It's not going to happen. And it doesn't, you know, you don't have to worry about it. You're going to make plenty of money with your Forex trading anyway, right? Don't get worried about not being in big moves. You will get in your fair share of them sooner or later, right? By having a good plan built and knowing what trades you're looking for, okay? So anyway, this week, what I'm saying is that if we can have a retest of the 6,800 area, this will probably be a very good place to look for a sell, if you can find a good entry point for a sell at that point. And now, why would 6,800 be a good area to look for sell? Because we're going to be coming right back up here to our X, right? And if we come back up to this X, we could get knocked back down into this lower quadrant again, right? And ultimately That's what we're looking for. We're looking in the big picture for the price to come on down to finish off our D on our weekly Fibonacci sequence. This would also be moving this pair dollar positive. And we've already decided that from the look of our dollar index, we think there's a strong chance the dollar index can go up this week. So if the dollar index is going up, the NZD-USD pair should be coming down, right? So anyway, that's why if we can find a good sell signal somewhere around 6,800, we're going to take it. And then we're going to put a tiny little profit stop on it and let it rip and hope that the market works with us and gives us another long bar to the downside. And we are in a big move like this, right? Does that make sense? But if the price gets to 6,800 and there's no sell signal, what are you going to do? You're going to stay out of it until you can find a signal. Okay? You're not going to go into a sell at 6,800 just because Mindy said, oh, that'd be a great place to put a sell. It's not what I'm saying. I'm saying it'd be a great place to look for a sell signal. Huge difference there, right? So anyway, that I hope you guys are clear on that. Because if I'm wrong and the price decides to go back up, what's going to happen? We're going to go sailing right through here. We're going to be trading again up in this upper quadrant, which means that my analysis of the market is completely wrong for this week, right? That could happen. That could happen too. So anyway, just be super careful, but I do believe that we might come back, retest the 6,800 area, and then take a whole nother leg down. So that's what we'll watch for right there. Okay, now let's go take a peek at the USD JPY. Okay, we're not starting the week in a real good spot here, are we? Okay, last week I said buys would be the preferred trades to hold, but we might see short-term sells all week long. Well, we didn't get anything of what we expected to get last week, did we? We didn't get sell trades all week long. We didn't get buy trades all week long. We probably got much nothing all week long, right? Because look at this bar, this weekly bar. Last week it was 73 pips. Remember 2 weeks ago when I was talking about how pathetic this bar was because it was so short and there was no price action? And that bar was 85. And this past week, our bar was only 73. That's like not even one good day of trading, right? And that was for the whole week. Now, why would this pair have done this when all the other USD pairs last week had a pretty good week? Right? Wouldn't you think that the USD JPY pair would have behaved similarly to all the other USD pairs that, all the other pairs had a pretty good week last week? Well, remember, the USD JPY pair, even though it's a USD pair, it does not necessarily trade with the other USD pairs. And that's because it's trading against the JPY, right? And the JPY pairs, all of them, including the USD JPY, trade more heavily with the VIX, the fear index. When there is fear in the market, JPY is going to win out, and prices are going to go JPY positive most of the time. Nothing ever happens always in Forex, but most of the time. And so anyway, what happened last week is that there was enough fear in the market that most of the JPY pairs had very strong weeks, JPY positive. But because the USD was doing so well in the other pairs, the USD JPY did not follow the other JPY pairs, or it would have gone way down. But it didn't follow the USD pairs either, or it would have gone way up. So it was kind of just trapped here going, I don't know what to do. I don't know what to do. I'm so confused. I think I'll just sit here and do nothing because I'm not sure what to do, because it's being pulled one way because of all the other JPY pairs. It was being pulled the other way because of all the other USD pairs. So what did we have? We had a week where it went nowhere. Okay, that's very unusual. Usually one side will win out sooner or later. Now, what can we expect this week? Well, this week, if the dollar index does well, as I expect it to, and if all the other USD pairs are getting dollar strong, I would expect that this pair, if the VIX can calm down, and we don't have any big uproar in the Brexit or the riots in France or any of this other stuff, if we can have a relatively calm week, I would expect that this pair could have an especially strong dollar positive week. Because ultimately, what's it going to try to do? It's going to try to catch up to where all the other USD pairs already have moved. Right? So, if it's a calm week in the markets and the dollar index does well, this particular pair could have a huge move to the upside. See what I'm saying? Does that make sense to you? But, you know, there's a lot of things that could sabotage that, right? If things stay crazy, you know, in the stock market, you know, the last few days of last week, our stock market kind of started crashing out again. Or we could have something bad happen to the Brexit, or they could actually start killing people in these yellow vest protests in the Eurozone. You know, a million things could happen to disrupt that. But if we have a calm week and the dollar is doing well against other pairs, we could have a huge move up. We could literally have, you know, 300, 400 pip up move in the USD JPY this next week. Okay? Or, if, you know, hell on earth happens, you know, it would want to catch up to where all the other JPY pairs are. And they all had a pretty good week last week to the downside, to the JPY positive side. So anyway, that's the situation for USD JPY. And I can't believe it. We still have 20 minutes left. So, does anybody have any questions? Because we actually have some time for questions today. Because this doesn't usually happen. I'm wondering, did I start the timer here on time? Usually I don't run out of things to talk about. But I did. So if anybody has any questions, you're welcome to pose questions about these pairs, or maybe other pairs that you're interested in me taking a look at. So I'll just give you guys a minute or two to see if any questions show up in the chat. Now I will tell you, since I'll talk about this while you guys are thinking up questions that you might be interested in. The EA had a pretty darn good week last week, and I wish so much that I could show it to you. But here is the demo account. It still has no connection. Let's see if we can log into this trading account again, and maybe they'll have this server up and running. No such luck. But anyway, the problem is when their server's down, I can't even get into the account history. It's just like the account doesn't exist. And so I'll just tell you what happened. Last week, when we started the week, this primary demo account that I'm running on the 15-minute charts, okay, had a negative P&L of right somewhere around $2,000, $2,100, right? Which was way more than I like to see, but I wasn't that worried about it because I knew it would turn around. But the equity balance on the account was down about $500 lower than where the account had started, right? But by midweek, well, actually from the start of last week, the account started getting better and better, right? And by midweek, the negative PL was down to about $1,000, right? And by the end of the week, the negative PL was literally back to being less than $800. At one point it was like $750, and which that still sounds like a lot of negative PL, but honestly it isn't, because most of that, in fact I think about 650 of the 750 negative PL was actually wrapped up in 2 trades that had been in there since the get-go, since the account literally started. And I think I just broke my, oh, and I did. I just broke my keyboard. Damn. Okay. I'm going to have to go out and buy a new keyboard tomorrow. Darn it. Oh, well. There goes another $100. But anyway, the, forgot what I was saying. Oh, yeah. But anyway, most of the negative PL is literally wrapped up in the hedges and quick fixers for 2 trades. So anyway, it had a really good week last week, and I sure wish I could show it to you, but I can't. But anyway, that's what happens with negative PL, even when it looks like it's getting really out of hand and stuff. If you stay on top of it, which you really should start staying on top of it when it's about 15% of the equity balance. But I was keeping a real good eye on it. But I didn't want to make any manual manipulations to it until I absolutely had to. And so I hadn't made any yet. But anyway, it did a really good job. Now, the one that's the demo account that Mary is trading on the 30-minute charts, it had a really good week last week too. And it's the one that's actually equity balance up about $3,300 right now from where it started. And that 30-minute chart, the most the negative PL has been on that has been about $1,000. So it's actually done much better than the 15-minute settings have. So anyway, it's pretty exciting. I'm pretty happy with all of that. They are, yeah, Ewa says those are very good results. They really are, actually, especially on those 30-minute charts, they're better than I thought we would get. But the thing is, I had told all of you from the get-go that as we go to higher and higher time frames, the profitability of the EA should exponentially grow with each time frame that we build set files for. And Mary is currently working on set files for the 1-hour charts, and when we get those finished, we'll be working on them for the 4-hour charts and ultimately the daily charts. So anyway, so far it's all panning out really well, but I'm so excited about it. But anyway, that's really all I have to talk about. And oh, Okay, let's see. Ewa says, what would you consider to be a sell signal on NZD USD? Well, let's go look. Okay, so on the NZD USD, okay, if we're looking for a sell signal, and we know that we're looking for a sell signal somewhere in the vicinity of the X here, right, which would be somewhere in the range of 6,800. We're not going to find a sell signal from the daily chart. So we'll have to be looking for that sell signal from shorter term time charts, right? So at 6,800, depending on how fast the price got to 6,800, that might be a pop out of the 4-hour chart, right? Now if the price creeped its way up to 6,800 and that allowed the array to move also, then what you might end up with is an array that was saying that this 4-hour bar might end up being a transition bar, in which case the next 4-hour bar you would want to have a full invisible pop out, right? Because that would be bar 1 of a 3-bar move. The next 4-hour bar after that would be bar 2, meaning again you would want a full invisible pop out. So that might mean that your entry target that you're looking for might be higher than 6,800, might be 6,820 or something. Then the third, if this bar turns into a transition bar, the third 4-hour bar after that, you'd be looking for a sell above all of the yellow bands and one band that's not yellow. And then on any of those entries, you'd also be wanting to match that with what makes sense over on the 15-minute and short-term charts. Did that answer your question, Ewa? See, that's why we can't just go willy-nilly into a sell at 6,800. We have to know what the charts are saying at that time, because the charts will lead you into the best entry signal point if you let them, if you read them right. Does that make sense to you? Because if it doesn't, let me know and I'll explain it a different way. Yes. Okay, so Ewa says when you say a quick move or a creeping up move makes a difference. Yeah, it certainly does. But who knows? I mean, it could pop up there right now and go, hi, I'm at 6,800, and we'd say, oh, great, we'll do a sell, because that would be a pop out, and it would probably be a pop out on the 15-minute chart as well, and it'd be exactly at the price point that we were looking for, right? But it might not do that. It might creep its way up, which would change entirely the structure of the array. Okay, so does anybody have anything else? Well, in that case, I guess we just will be done 10 minutes early. But I do want to thank everybody for coming to class. I know that Sunday afternoon is a sucky time to have a program like this. And I know that most people that buy this program watch the video. They don't actually come to class. But I appreciate it that you guys actually come, because it's easier than me trying to talk to myself when there's no audience, which has happened a few times. So anyway, I think everybody needs to say a big thank you to Raymond for making sure that you guys have access to the handout every week. Because it doesn't get posted to the TSU library until after the fact. So anyway, thanks Raymond for that, and thank you all for being here, and I'll see you next week for PowerTrader Forex. Okay, so bye for now.